In this video, I'm going to show you exactly how to use chart prime the right way, because if you don't want to lose money using the indicator in the wrong way, I'm going to show you how to do it the right way. There are so many different ways that you can use chart prime, and there's a lot of different indicators. But as you start to use it, as you start to get familiar with it, you're going to find indicators that work for you. Now, with the type of trading I do, just so you know, if you don't know who I am and how I trade, is I like using market structure and smart money concepts in conjunction. So I configure Chart Prime to match that style of trading. And I'm going to show you exactly how I look at the live markets, how I pre-plan my trades to where I can set my orders at where I like to set them and just let the orders play out if I don't have time to trade in a live market. That way you can trade in a more efficient way, and then catch the markets in a pre-planned way. There's ways you could pre-plan it. So let's get right into it. So looking at the market, the first thing that I'm going to do, if I didn't have Chart Prime, I would look for market structure where current market structure is. But Chart Prime does a good job of identifying the change of character of the market structure being currently in the bearish way. For me, I could see that right away. If you need help seeing the market structure, you can always go to your Market Dynamics Pro and turn on the color candles, and the indicator will tell you which way market structure is going. But I do like seeing the contrasting candles, so I'll only do that if I'm, debating on if it's upward or downward market structure. So for me, I know it's downward market structure, and I know that I will be looking for sales. So if I was looking at this particular market, this is EuroCAD, I see that there was kind of a slow upturn and move, and then you had a sharp down move here. Now, that sharp down move being a change of character. So now the markets have been consolidating in this range for the last couple of days. And what I can do just to make it easier for you, I will go ahead and turn on the session breaks. So that way you can see that it's been a couple of days. There you go. So now, the way I'm looking at things, I'm looking at it now that I've identified the market structure of it. I know that the trend is down for at least the most part from the recent move in the market. Now I start to use the indicator to kind of do the work for me. So normally, before I use Chart Prime, I would have to go in and identify where order blocks would be, where points of interest would be, where premium and discount zones would be. But now with Chart Prime, all I have to do is go into those different areas of the market. So for example, there's order blocks here. I'll increase the number of order blocks as shown. I'll start with that. I do like the liquidity zones, and I do like the premium and discount zones. So now, let me kind of get that out the way so you can see. So now I have multiple levels where I could potentially get in. I don't like entering trades at the equilibrium. So with me looking at this market, if I'm looking to enter a trade, I do see that this is an imbalance here, but the premium discount, so you're looking at value trading with your smart money method, is putting the equilibrium in this area. Why is that significant? Because you want to buy low and sell high. So when you're selling, you want to sell as close to the premium bar as you can, but obviously you're not going to get up to that price level all the time. So what would be on the way there that could be a good level to look into? Before, I would have to try to identify these levels. But Chart Prime shows it to me without me having to identify them. Level number one would be this order block zone here. Why is that significant? You had a strong down candle, then there was a tightening, so basically a price battle right here with this doji, but that bullish strength didn't hold up at all, so you had a continuation of a downtrend. So this area is significant because something happened in this area and more orders had to come in to fight its way out of that area. So that's an area I would look at. The second one would be the imbalance above that area. For me, before chart prime, I would have to use my Fibonacci and get the 50% range to the 71% range. So I would go in, do my institutional fibs, which would be actually that one. Here we go. And I would go in and identify kind of where I want to play within, which is between the 50% and the 71%. And that would be my imbalance goal. But you notice Chart Prime already has the line marked out there, so I didn't have to do all that work. So the more time I'm able to save, the more things I'm able to look at. So now what I'm anticipating, if I don't get a breakdown, because that can still happen, nobody's perfect in how things play out. But if I can get some liquidity, because something's going to play out. This is a good size consolidation bar. So good size consolidation usually leads to a bigger manipulation before the next move. So if I can get, ideally, a move up here, maybe a false Monday move, especially with the holidays coming up, to either there or there. And then have my move down, either back into this discount zone or into this order block zone. That would be a great trade. I don't even have to wait for the extension. I would have a very profitable trade just from getting back to the last level. So if I had a trade here, I could have my stop loss be there. And a 2-to-1 trade is getting back to the middle of a consolidation zone, which is a very easy level for the market to get to. A middle of the consolidation, a lovely area that's already 2-to-1. Getting to the bottom of the consolidation is already 3-to-1. So that's a trade I could live with on that side. So that's one option. And then, like I said, using the indicator makes it so much easier. The second option is the higher level, which is the imbalance above the order block. To me, I do like this level better because that imbalance can still, if I took this trade here, that imbalance can still act as a magnet for manipulation. So my favorite trade would actually be this trade. It's just a matter of if the market would actually reach that point. But I can get into this trade, kind of zoom in so you can see. Stop loss is really short. Let me redo it. So entry being in here, target being back to this level, kind of back inside them. You can either I can either go into the top part of the consolidation, which that's still a level because that consolidation is playing out. I can use this kind of, order block as a buffer or a last upward move before the big down move. That's a institutional buffer because interest had to happen at this top price level. So if I put my stop loss above it into the institutional interest, and be above it, then I can have a really safe zone here. And just at the top of the consolidation, I'm at 2 to 1. Middle of the consolidation, I'm almost 3 to 1. So very two good setups. And I was able to find that because I didn't have to go through and analyze each particular thing and find each particular thing that Chart Prime is given to me. What would help me make the decision of which level to take is the oscillator. Because the oscillator uses so many different dynamics to create this visualization that if I start to see where the market gets into the oversold while it's getting into my institutional levels, I'll really love that. Or I see where the divergence may happen. I don't think divergence will happen in this instance, but either divergence happens or a crossover happens coming back down. Those can be other things that I can use as confirmations. So I'm combining the indicators in a way that fits my trading style, and it makes sense. Going to another pair, we're going to do it one more time. Let's go outside of the European pairs. Let's go into the Great British pair. That's fine. We can use this one. So, one thing that we can do is now we're going to look at same thing. We're going to look at where market structure is. So in this instance, there's a lot of choppiness in the market. A lot of choppiness. So I'm not going to look for too big of moves here. I'm going to look for moves in sections because of the choppiness. I'm not getting those massive moves. Now, this is still a Great British Pound pair, so this is still 100 pips in this instance. So if you're able to hit 100 pips in trades, which is pretty regular if you use this style of strategy, you can get a good consistency out of that. Now, looking at it, first thing I'm going to look for is trend and market structure. So the indicator has a major low being here. Market did break that low. I'm also considering this level right here, as a low level because that was the last kind of base point before the last bullish move. So if you look at the way the market structure played out, you had kind of a baby move here, final pullback into the last move. And now you have, your double top kind of forming. So this last move is significant. So for me, I'm gonna identify this point right here. So I got kind of 2 points to analyze and go off of. If I wanted Chart Prime to do that for me, instead of me doing that, you can actually have Chart Prime do the highs and lows. So swing high, swing low data, you can have that be enabled. And now it'll start to show me where the swing highs and swing lows were. If I want to make it more sensitive because it's choppy, I would probably make the market structure indicator more sensitive. I would decrease the number. So now I have it all placed right here. So I decreased and made it more sensitive so it could read these choppy points correctly. So be more sensitive towards that. And I'm doing that because I'm seeing that the market is making a lot of small highs and lows. So I increase the sensitivity on the market structure. So now that I got that taken care of, we know that it's making a lower low, lower high, and then it's at a lower low point potentially. What I'm going to look for, where would the market go? Where would the market go? That's the next question. Because I'm looking for the pullback. Because we had basically a big extension right here, from here to here. So where is the market going to go from? I believe, you see the equilibrium is right here. I'm always going to trade above or below the equilibrium in a market structure dynamic. The equilibrium being here also could be a little baby consolidation. Next point would be right here for multiple reasons. One, it was the significant higher low in the market. You even had the indicator use this one. Like I said, you could have used either one in this scenario. I'll mark both because my pick was the last move before the highest high was created. The last high was created, and then this indicator has this as a major high low point. So you can use either one, but both are above that equilibrium. I personally, the higher I can get, the better when it comes to selling the market. And the fact that there is an order block being identified right here, that gives me more confidence that this is an area I want to pay attention to. So we have that aspect. If I zoom in, you did have some imbalance in this area. Most of the imbalance was mitigated. You see how it came in? You have this is the order block, this little shade is the imbalance. So you had a lot going on in this area from an institutional standpoint. So that's a great area for me. So another one that could possibly be a point of interest for me. So this is number one. Another one that could possibly be a point of interest, the last bullish move before the significant downturn. So that being the last bullish candle. So for me, kind of this area here is my trading zone. That's what I'm looking for in this time frame sake on the 1 hour. So if we can get a trade right in here, you can place a stop loss above the last lower high. Move this up, kind of get in the middle of it, kind of go in the middle. So stop loss above the last lower high. And then I can look for my 2-to-1 being back. See how the math just kind of plays out. Back in the equilibrium is 2-to-1. I love that. So the current equilibrium, that being 2-to-1, that's a great one. The equilibrium may move depending on how the market works. It doesn't move much. Or trading it back down to the lower low, which that would be the lower low in this scenario if the market goes up. That would be a 4-to-1 move. So a great thing to have to be able to trade the markets. And like I said, I'm explaining it, so it's taking a little longer because I'm explaining what I'm thinking about. But if I was just going through chart for chart, I could probably do all of this within a minute per chart, minute, 2 minutes per chart, because this is doing a lot of the legwork for me versus me looking at the charts longer, trying to identify all these areas myself. So this is how you use it. This is how you make your trading a whole lot easier for you. You can do this with stocks. You can do this with crypto. You can use the Market Dynamics Pro with Forex, gold, silver, indices. Using the Market Dynamics Pro will make things a lot easier. Now, let's just say you're not as patient, or you're more patient. You want to make sure that these areas are the points you want to trade in. You can go down in time frame. So let's kind of go back. I'm gonna kind of highlight this point here. So this was November 7th area. So I'm going to go down to the 5 minute. Put this together. We're going to go back to that same area. So this is where the higher highs happen. Now, obviously, the market is played out, but you can still see the points. So I'm looking for the next trade. I'm looking for the trade that would help. What I would do, let me actually go back because I went ahead. Go back to this point. Let's do a little circle here. That way we identify that area. So that was the highest high. So let's say this forms, this highest high forms. You can go down, like, we're back in time. So we're going to go back. We're right back in this area. And I want to focus on this area on the 5 minute. I'm going to show you something that you can use to help you identify a more accurate trade, because if you're able to find a reason to trade on a smaller time frame, one risk management trick you can use is that you can use the smaller time frame stop loss and use the bigger time frames take profit. What I mean by that is, on my other trades, you saw that the stop losses are like 50 pips or 40 pips if I'm taking into account for that time frame. If I zero in and look at the time frames that are most important, or are lower than the time frame I'm doing my main analysis on, and I'm looking at the lower time frame for triggers or entry points, then I can figure out why I would put a stop loss based on a lower time frame, because I'm able to see that time frame, see what's going on. So right away, I notice a couple of points. If I'm looking at market structure on the lower time frame, I'm seeing that you get the higher high, higher low, higher high. So now you can do this one of two ways. You can disregard the market structure of the lower time frame and just look for the entry point on a lower time frame based off of smart money concepts. So you're already looking for a sell, you're looking for a reason to sell. I'm still going to follow smart money concepts, so I'm not going to just look for in a reversal trade in a lower time frame. We're still trading with the trend, so we're going to find the trend and get a trend trade on a smaller time frame, which would be faster than a trend trade on the higher time frame. So this is my lower point. I'm looking for the trend to actually change on the smaller time frame, or a change of character on the smaller time frame. So what happens is you actually get 2 points where you can do that on. So the first point you would have to be a little bit more patient for. And you don't know if it would actually happen or not. That's why the patience comes into play. You get the change of character, or the break of market structure here, because you get this lower low. So you have the market structure break at this lower low. So now that I got a lower low, what's next? Find the lower high. So what would be a good lower high point? It's going to be on a 5 minute, so it's not going to be as much data because it's on a smaller time frame. One thing that I would identify is this order block right here. And I remember, even though I do see the result, remember what I was doing with my pre-trading work that you saw earlier. I was identifying the order blocks as a potential point of interest. So same thing applies here. The only option you really had was the order block here. And if this was a live market, you would have saw the imbalance there. So you would have had 2 points would have had 50% of the imbalance there, or the order block. Those would have been your 2 points after that lower low was created. So basically, you would have to choose, okay, from which point you would want your trade to be. So would you want your trade to be right here, which wouldn't be bad. You have a 20 pip stop loss versus a 50, and without even really getting far within the markets on the 5 minute, you have a 3-to-1 trade just by going to, like you see lower lows down here. You have near 3-to-1 trade going based off those lower lows. Or if you go off the most recent lower low, you still have a 1.5 to 1 reward to risk, or 1 to 1.5 risk to reward, whichever way you want to say it. If I use the order block, which to me would be the stronger point of entry, because not only it was a little bit of a push after this point, so that means there was interest in that price level, and I like to trade where interest is. This is what the order block entry would look like. I would place my trade here. I would have my stop loss above, so it'll still be almost 20 pips. And then now, going down to the lower low, I'm at a 2-to-1 reward to risk. Getting down to further, I'm at a 3-to-1 reward to risk. Now, if I'm using the bigger time frame, I can kind of zoom out on it. Go, where are we at? So if I'm using a bigger time frame here, I would go down into this other low point. You can go down to here, or you see that there was a slight, support resistance. All we're looking for is like buffers. Where would buffers be that can move the price against your trade? So that would be a buffer right there. So that trade, because that's the support resistance. You see the big candles breaking that level, wicks respecting that level. So that's a very good price level. So that would have been almost a 5-to-1 trade. So you can use the small time frame stop loss, bigger time frames take profit to increase your reward to risk. You have to be more patient. Have to find a trade on the smaller time frame that makes sense, not just to enter the market, but that actually makes sense. But then you scope that trade out on the risk management side to get those higher rewards to risk. That's how I use Chart Prime to isolate and find my trades in the live markets. Hopefully this video helps. If you need access to Chart Prime, the link will be in the description. But definitely let me know how you like this strategy.